Imagine that you're on a beautiful, pristine beach. Coral white sand, turquoise blue water. There's a nice breeze coming off the ocean. You have a cool drink in your hand. You're sitting on the beach and your partner is coming down and she says to you, "Honey, let's go dive in the water." And you're about to get up, but as you do, you say, "I just got a text message and it looks like one of our rental properties has a flood in it. I got to go take care of this right away." Oh my gosh. For anyone here who has rental property, who has been a landlord in the past, this is a scenario you're probably familiar with. You know who doesn't, though, deal with that kind of situation? The ultra wealthy, high net worth individuals. Because while they're invested in things like real estate, they're not directly responsible for taking care of it. And they get to live a life of true freedom, where you don't have to worry about the assets and the investments that you own. So ladies and gentlemen, my name is Darryl Bandoro. I'm known to my clients as the Wealth Defender, and I typically help business owners and professionals get access to the strategies of the ultra high net worth. And what that typically involves is investing into private companies and private real estate so they can have that worry-free lifestyle. Now, I didn't always know about these private real estate investment opportunities, and many of you may not be familiar with them yourself or how to access them, even though I had been in the industry for dozens of years. So let's take us back to the year 2000. That's when I first entered the financial services industry. And then, at that time, I was working as a stockbroker, trading stocks, bonds, mutual funds, all of that. And I entered into that world during the dot-com bubble. This is when companies that were barely making any money, or not at all, were worth tens, if not hundreds of millions of dollars. But eventually that bubble burst, and the dot-com and tech companies started crashing down. But the most memorable event that I had during my time as a stockbroker was on September 11th, 2001. On that fateful day, I remember sitting with my colleagues on our screen, and on our screens, all of a sudden, everything went red. And I think all of us can remember where we were during 9/11. And when I was there, I saw on the stock market a huge crash. But one of the first things that happened in Canada was that the stock markets were still open for a little while. And while I was seeing the smoldering image of the towers burning on that day, I got a call from one of the high net worth individuals. I picked up the phone and he said, "Darryl, sell everything." He had been around the block a few times and he knew the volatility that is associated with the stock market. And he was right. Within the next 2-3 weeks, my clients lost 10, 20, 30, even 40% of their life savings in a very short period of time. So that certainly taught me the lesson that if you put all your money in the stock market, you have to be prepared for a lot of volatility. So I thought to myself, how else can I help my clients make money? And I came across an interesting quote that said, "More millionaires have been made through investing in real estate than through any other asset class." So that was my aha moment. And I started looking into options there. And I actually switched my career path to becoming a mortgage broker focused on helping investors buy property. I started buying property myself, and I eventually started a firm where we were working with investors to buy various properties, and we bought dozens. And while they're right, you can make a lot of money by owning real estate and investing in it. But at the same time, it's like having a second job. It is a lot of work. Dealing with tenants, dealing with repairs, that can come with all kinds of headaches and hassles. So one particular story that I remember is I had a pair of tenants in a property, and they were always late paying rent. They would get to a point where we would take them to a landlord and tenant board tribunal, and they would get a notice saying they would have to leave the property up to, if they didn't pay by a certain date, and always at the last moment, they would finally come up with the rent. And they would do this month after month after month. So eventually, we did actually get them evicted. But when we got into the property, we decided we want to sell it. We found this horrible smell. And we were washing the floors, washing the walls, using industrial detergent, and we couldn't get rid of the smell. Finally, we discovered that there was a hole in the wall in the basement. And behind the walls, there were hundreds of pieces of cat poo. The tenants' cats had been going behind there and making some nice deposits. So if you've been a landlord, or if you own property and you've been doing it for any significant length of time, you probably have your own cat poo story. So it's not really for everyone, or at some point, many of the people that I've worked with have decided they've reached their limit. They don't want to own more property, and maybe they're actually thinking of selling the property they have. So what alternative is there? What I discovered about 5 years ago was the world of private equity. This is the world of investing into private companies or private real estate transactions. And how that's different from the stock market or regular real estate is that if you're investing into a private company, it doesn't trade on the stock exchange. So it doesn't go up and down with all the movements that you see in the normal stock market. And in the real estate side of things, what you're doing is you're investing with a management team of people who are doing all the heavy lifting. They're going to find the property, they're dealing with the tenants, they're dealing with any negotiations that are required, and you, as a private investor, are simply investing into the project and then waiting for the profits. So maybe you won't make as much as if you bought a property yourself, but you have none of the hassles associated with that, and you still get the benefit of investing in real estate and having direct ownership. And this is what the ultra-wealthy, the high net worth people do, and also the pension plans and the endowment funds, the institutional investors out there. They are putting up to 50% of their money outside of traditional stocks and bonds and into private companies and private real estate. So after discovering that fact, I thought, wow, why aren't most people doing the same thing? And the reality is the banks and the mutual fund companies, they don't offer those kind of investments to the mass public, so they have no interest in promoting it. But, and also at the same time, you used to have to be a very high net worth individual to even get access to these kinds of deals, to find out about them. Luckily, however, the barriers have been coming down. And it's now easier and easier for people of modest to high net worth but to be able to participate in these types of investment opportunities. But you do no longer have to be an ultra high net worth person, which is usually someone who has $20 million or more to invest. It's much easier to do. So how do you get access to these opportunities? Well, you can work with someone like myself. I am licensed to be able to offer private market opportunities to clients. And as I said, it wasn't easy to get access before, but now there are more and more people like myself. But you still have to pay attention to what kinds of opportunities are being offered into the marketplace. Because once you discover this world, you'll see that there are literally hundreds of different types of opportunities that you can invest in when it comes to all these private companies or all these real estate projects. But they're not all made the same. They're not equal. And you have to find a way to identify the good apples from the rotten ones. And that's my job. Having been in this specific field for the last 5 years, I have seen the good, the bad, and the ugly. And I know what to look for and to help my clients get into the best opportunities. So my firm does weeks of due diligence when examining a potential opportunity. We do background checks of all the people involved, we check their track record, and we look at their financials. And we only pick the best of the best to come to our clients. There are always going to be risks in any kind of investment, but we want to pick opportunities where the due diligence has been done so that we are minimizing the risks so that our clients have access to opportunities where they know they have a substantial opportunity, chance to make a good return. Lastly, an important part of my job is to really understand my client. We go through a whole know your client process where I try to find out what your situation is, where are you coming from, and what do you have already in your portfolio. Because these particular investments may or may not make sense in your portfolio, and that's something we have to discover. We'll look at what your tax situation is. Do you have room in your RSP or your TFSA? Because certain of the investments that I offer have excellent tax advantages. So we want to structure your portfolio in such a way to take advantage of those. We also want to make sure you do qualify because there are rules in place so that doesn't allow everyone to invest, and make sure you're investing the appropriate amount of money into these types of investments. So getting to know you and understand what you're doing is also vitally important. So you might be asking yourself, so is this right for me? Are private equity investments and private real estate something that I should be adding to my portfolio? And I would say this. If you want to be using the strategies that the ultra wealthy are using and the high net worth institutions are using to diversify and stabilize their portfolio, then yes, perhaps it's for you. Or maybe you'd rather put all of your money in the stock market, and which sometimes feels like a casino. Then please go ahead. Or you might say, look, I'm done with investing in real estate directly, or at least I want to slow down and minimize my portfolio so I don't have to deal with tenants and what have you. Then again, this is an opportunity for you. But if you like being a landlord and fixing toilets and dealing with the occasional cat poo situation, then yes, of course, you might want to do that. But the real answer to the question of whether this is appropriate for you is, I don't know. It depends. And what we have to do to get that, to find out whether it is appropriate, is for us to have a conversation, for me to do an analysis of your situation, and for us to have an understanding, so that you know for sure whether this type of investment is correct. And I will be the first one to tell you if it isn't. So let's go back to that beach scenario. And let's look at a situation where you actually have some of these passive private investments in your portfolio, and you have this sense of safety and the sense that you have true financial freedom. So when you're sitting on the beach with a cool drink in your hand, and your loved one comes by and says, hey honey, let's jump in the ocean, without a second thought, you go and you dive in.